We are official.
Recording.
Official. All right. So, welcome back to the Brutally Honest Loan Officer Podcast. I am Stephen Brock, and with me, as always, is Mr. Derek Brown. Say hi, Derek.
Hi, Derek. He told me to
Should have
say
known it
hi,
was coming.
Derek. What's up, man?
Doing good. Fun little
How was
weekend, but I heard yours is
how was
way
your
more
weekend?
fun. Mine was
Well,
good. All we did was I had an event with a realtor that was like for fundraising for um like a cancer charity, like a shredded event for cancer charities. And me and my daughter helped her out there outside, which I think it was probably at least here, it was record breaking hot for
gotcha.
whatever day it was. And then Sunday, we were soccer all morning. Then it was their like graduation. So it was soccer pizza outside slash pool party. So we were outside probably for like 7, 8 hours straight through all that. Another eventful day. What about
Did you get
you?
in the pool at the pool party?
A little bit.
Okay,
Oh,
yeah,
it helped.
yeah. So before we started hitting the record button, I asked Steven how his weekend was. He's like, "Oh, I'm tired." And I was like, "Oh, what'd you do?" And he's like, "Oh, well, not really anything. I'm just tired." I'm sitting here thinking, dude, I had an action-packed weekend. Like Saturday, we had woke up, do breakfast. Um, Then I did about 4 or 5 hours of landscaping, which we've been meaning to do since we built our house. We just never finished the front landscaping in the front yard, but did that. Then we had a pool party. Then we had a graduation party, then a retirement party. In that mix, my wife went to a baby shower. The retirement party was, I don't know, like 30 minutes away, but it went late. So we kept our kids up till like 10:30, which is crazy for us. Um, and then woke up the next morning, breakfast, then drove to Jacksonville, 2 hour drive there to go see my aunt, my cousin, and then drove back. So that's why I'm tired. I feel like we had an action packed weekend, and Steven's just like, well, I was outside for a couple hours and it made me tired.
It did. That's how old I am now. I,
I know I do not recoup
I
the way I used to.
did do yard work on Friday, so I will say that, but it wasn't 5 hours.
Dude, so like okay, I planted 30 plants, I guess. Some bigger, some, but some like I don't know, smaller. My forearms the next day on fire, on fire. It's
Uh,
unreal. Like I'm out of shape. I don't know, doing stuff that I haven't done in a while.
uh,
Ugh.
Homeowner life. But all right, well let's get to our
What
episode
what
today.
is today's topic?
Co-signing for a mortgage.
Ooh, I bet we're gonna go over pros and cons.
I bet so. I bet you definitely know what we're going over because you helped write this up. But but we do get a lot of questions on it. I feel like nowadays it's almost like when a lead comes to you and there's like, oh, you're one income, like you're probably going to need somebody else depending on the income with it. But it seems like almost every loan is two incomes, not always somebody that's going to live with the person, but another co-signing on to the mortgage. So let's get into it. Pros of
Right.
co-signing for a mortgage.
Yeah, I mean, I do. There's gonna be pros and cons. We'll go through that. I think that there are also several reasons why people ask us about having a cosigner.
Well,
Um,
let's explain that too, because a lot of people think a co-signer or a co-borrower is somebody that's going to live in the house, and it doesn't have to be.
right. So we are talking about like, let's just say a husband and wife are buying a house, and this is probably one of the more common options. Husband and wife, wife has decent credit, husband doesn't. Just from like 10 years ago, still rebuilding credit and stuff like that. Or maybe the income is not stable, but still there's income there. We might look at adding a parent as a co-signer to the loan to help them qualify for what they want. That might be the most common situation that I run into on a regular basis. But the parent would co-sign basically. Um, they're going to provide documents. They're going to help qualify for the mortgage. And in turn, they are also responsible for the mortgage payment. So I don't know. There's several different reasons why. Um,
Well, let's get
I
into it.
know.
What's
Yeah, let's get
reason
into
one?
it. So
Reason one.
reason one probably is just your improved loan approval chances. So adding a cosigner, adding more income to help cover the costs and the debt of the new mortgage is most likely your number one pro. So it's going to just help that primary borrower qualify for the mortgage when they may not have been able to qualify before.
And
So
I will say the example you gave isn't somebody living outside their means, because that's, I don't want you to think, I don't want people to get a cosigner and saying, hey, I just need to afford, I can't afford what's here, so I'm gonna get a cosigner, but then I can't really still afford the house.
yeah, I don't want to do that ever.
This is more like, hey, I have a co-borrower, their income just doesn't count.
Right.
Can't count their income. So there is still another source of income here. We're getting a family member to help us co-sign to where their income can count, and then we're still going to pay the bill with their, other partner.
Right. No, agreed.
So improve loan approval chances. So like you said, there's more income, your debt to income ratio is better, your credit history is better with,
Well, and
having
okay,
loans.
so here's another example that I've run into before. Let's just say it's a younger couple. And they started building credit like 8 months ago or 6 months ago, and they have like a decent score, maybe 700 plus. There are times when we like run our automated underwriting and we don't have an approval because of the length of credit. So they have a good credit score, they're paying things back on time, they just haven't done it for long enough. Their two credit cards that they have were opened up 6 months ago. So they might just have been reporting for the last few months. And because of that, but they've got a good job, their debt to income ratio might be super low, and there's not an approval just because of the length of credit. So adding a cosigner to that could make all the difference. Somebody that's had credit and shown the ability to repay a loan for the last 10 years, that can make the difference.
Yeah.
So then we're not doing it for necessarily qualifying as far as making the payment, it's getting the approval. So and that can make the difference of better loan terms. That's another pro. If you're trying to go conventional versus FHA or vice versa, there's definitely like reasons why you might want to go with one loan over another, and it can come down to mortgage insurance, interest rates. One of them might be able to give you a lower payment. It really just depends.
That's good. Now, like you say, getting better loan terms, you're co-signing to help a loved one basically achieve home ownership is what you're doing. Providing them a stable place to live, potentially improving their financial situation. These are all pros to co-signing with it. Now, depending on what type of loan you are doing, conventional FHA, VA, the co-signer has to still follow in certain things. Like if it's a VA, if there's a co-signer, they have to be a veteran too.
Correct.
Most people don't. They're like, oh, I'm gonna just get my family to co-sign. You cannot do that on a VA. The other person has to be VA too. Now,
Correct.
FHA, they're even a little bit, they're less strict on that part, but it has to be basically family. That's a
Right.
co-sign with you. Now, who they consider family is a very wide range.
That's my cousin.
Yeah.
That's my brother from another mother.
And it's
Can you
very
do that?
wide range on that one.
Maybe. I don't
I
know. It's
will
not
say
like
I did
we
have an
don't ask for a
instance.
DNA test.
Yeah, but they don't. But they do kind of look into it, because I had one where husband and wife, husband credit was crap, so we couldn't use his stuff. We thought they were married, but they were not actually married. So they weren't actually husband and wife. They've been together forever, but legally they were not married.
Right.
But the quote unquote, so it was just the wife on there. The father-in-law was co-signed through FHA, but they were technically not allowed to co-sign because they were not family, because they weren't legally married. He wasn't there. And then luckily, I went back and fought it and said, well, the husband and wife that aren't married have a kid together. So therefore, the father-in-law is the grandpa of the kid, so they should be family. And FHA was like, "You're right, they are family now."
Boom. Look at that.
So
Look at that little family tree.
got to
Approved
figure
that
out.
loan.
Got a little weaving and wooing over there and saying, "Hey, no, he's a grandpa. They are family." Like,
That's
yep,
awesome.
that works.
That's thinking outside the box a little bit. Love it.
Yeah. So yeah, you definitely, family who you're engaged to technically counts, can co-sign with you. There's definitely there's a lot.
Right. Yeah.
Now, you got shared responsibility with it now. The primary borrower has support, making the overall mortgage process, a little less stressful on them. It
And I've
helps
had
them.
that. I've
Yep.
had that where a parent wants to co-sign and contribute. Like if the mortgage payment's going to be $2,000, we're going to give our daughter $1,000 a month to pay that portion, so that she can live in a different neighborhood or something, like a better home and stuff like that. And I've had it where like the parents 100% are prepared to contribute to that.
I've had them
So it's,
gift money too. They're
yep.
co-signing, so like they quote them not well. Technically, they're co-signing. They're not gifting, but they're
Nope. Just an asset.
just
Yep.
an asset. They're adding money into the down payment and closing costs then.
Right.
So it can be a huge advantage to a lot of people. It can take them from one area to another. It could take them where, hey, my spouse's income did not count. I need to add somebody else's income on here. So it just, helps them overall achieve home ownership that they would not have been able to achieve without it. And I
Right.
think lately, I would say the last 20, 30 days, at least 10 of the people I have pre-approved have had a parent wanting to co-sign with them. There is a
Well, when you
lot of people.
consider consumer debt at an all-time high, incomes are not increasing as much as debt is. So yeah, I mean, it's one of the solutions we look for, in order to help somebody purchase a home. But like we said, we're not trying to put somebody in a spot where they can't pay their mortgage. We're looking to help them. And sometimes that is the best, route to go. I've also had situations where we might be pushing the limit a little bit. However, the buyer 100% plans to have, somebody rent a room in the house, and that's going to help offset that mortgage payment, and make it a lot easier. And then the affordability,
I see that a lot too. People are
easier.
like, I have a roommate, but I don't want them on the mortgage. Well, we can't
Correct.
count that income that they're giving you.
Right.
So you still need a cosigner. So they'll have family cosign, and then they'll have a roommate living with them.
Correct.
Do it.
Now, what are the cons? Why would you not want to do this?
The cosigner is technically still responsible 100% for that mortgage. They're
The
both
financial obligation is real, people.
Yeah.
They are just as like the co-signer is just as equally responsible for that mortgage, for that payment, for the upkeep of the home, as much as the person living in it. So if the borrower defaults, so does that co-signer. Unless if I mean, I've had it before, not on a mortgage, but where somebody co-signed for a car. I have a client right now co-signed for her sister's car, and her sister, I think the loan is like 9 months old, has never made a full payment on time. And as a result, my client's credit score is in the toilet. So same thing goes with the mortgage. And one of the worst things you can do for your credit is pay something late, not on time. And that can be car, mortgage, whatever.
Yeah, that's a huge thing.
So and I mean, that's the other part. I mean, it's just the credit impact. So the financial liability, and then it can 100% impact your credit.
Yeah. So it also reduces, since it's on your credit report, it reduces your borrowing power. If you co-signing for a mortgage, you're trying to obtain new credit or new loan or a new mortgage, that other mortgage is still considered part of your debt to income ratio. Now,
Correct.
caveat to that is if the main borrower has been paying it for 12 months out of their own account, then we can show that, then we can I don't want to say write it off, but
No, but we can exclude it.
we exclude it. That's the word. We can exclude it from your debt to income ratio. Now you're still financially responsible, still in your credit, but it happens all the time. Parents co-sign for kids' cars. They're trying to get a new mortgage. Hey, my kid's been paying that car payment for the last 2 years. Fine. Let's show us 12 months of payments from their bank account with that kid's name on it, without the parent's name on that bank account, and then you're able to exclude it. Now, if they
You want to
miss
know?
one payment,
There it is. I was just about to say.
Yeah, if they miss one payment, so they're at 12 months or 13 months, and then suddenly they miss a payment and they got to start over, does not count. It has to be 12 consecutive months of payments.
Um, I had one where we were trying to exclude the car. We could prove, God, 12 months of payments easy from, excuse me, borrowers checking account. However, 3 years ago, there was a late payment. Couldn't exclude.
Just 3 years ago?
Yep.
Wow.
There was a late payment, and that messed us up. I can't remember what type of loan we were doing. But that hurt us. However, parents were awesome, and as a graduation present, they paid off that car. So there wasn't very much left. But still, I mean, awesome little gift. And that helped us qualify.
Yeah.
So, but yeah, I don't know. I mean, so think about that late payment. What if a late payment is made? I mean, that's just going to put a strain on the relationship.
Yeah.
From, like if we're talking about like uncle, grandparent, parents, your godmother, whatever, whoever the co-signer is, can like have a serious strain on your relationship if you're not paying on time, or if that person did not realize the impact it would have on their borrowing ability. So later they can't get approved for, and let's just say it's 6 months from now and they want to buy their house and they can't because they helped you buy your house. Like, I just, and
Now they need a co-borrower.
correct. Yeah. So we're just climbing up the family tree on who can help who borrow. So I don't know. There's definitely potential for, strain on that relationship. So just be aware of that too. And then worst case, I mean, legal action.
Yeah. So if you default and they basically foreclose on you, and or court decides, hey, we're gonna garnish your wages, as the co-signer, they can garnish your wages too.
Right. Put a lien on the property. Just, I don't know. So we want
So
to
you
avoid
just
that.
because you don't live there, the fact that you are on the mortgage, you are still responsible for it 100%.
Correct.
Now, let's just say they helped you co-sign and everything. You are good now, or the other person is, that they had a, their spouse had an income they couldn't count, or what, for whatever, self-employed for a year or something, whatever it is, or they couldn't count it and now they can. It's pretty easy to remove somebody, right?
Not so much. It can be difficult. You're typically looking at a refinance. You got to refinance the mortgage. And that's where we start the mortgage over. Unless you potentially now qualify for like a 15-year mortgage, you could look at doing that. But otherwise, I mean, we're starting a 30-year mortgage all over again.
Yeah. So to take
Some
somebody off the
benefits.
mortgage, the only way to do it is to refinance it. Now, people always get confused. It's like, oh, I'm gonna take them off a title that clears them. No, it's very
Yep.
easy to take somebody off a title. Not very easy to take them off the mortgage. You do have to refinance it completely.
Right.
These people that were helping buy houses 2 or 3 years ago with a low interest rate, and they're like, oh, I need to refinance this person off, or I need to remove them from my mortgage. Let me refinance her. We're like, oh man, the rates have jumped.
Right.
It's a lot harder to do that now, or I guess it's a lot harder to swallow to do that. They could do it still, but they're like, oh man, my payment's going to move up just to remove that person.
Right. So, and I mean, it depends. Interest rates depends on when they bought. If they had a 2% interest rate and they're now looking at a 6% interest rate, yeah, that might be unfortunate. But depending on the family member that co-signed, and what they're trying to do now, they might have to. So that's one of the things we want to, when we're looking at, and I've had several times where a parent wants to co-sign and they're retired. They're not trying to buy anything, ever again. So co-signing, not a big deal to them. I've had a grandparent co-sign before. Again, not trying to buy anything, not looking to, buy a new home in a year or two, or buy a second home or investment property, anything like that. So co-signing sometimes is really easy for certain family members.
Yeah.
But that's just something that we try to make clear at the very beginning when they start bringing up adding a co-signer.
Yeah, these are some huge points that people need to consider on it. it can be very beneficial, but also very risky. You have that's I mean that's I definitely see why FHA conventional I haven't looked at conventional. They have a big who can be who on co-borrowing.
Yeah, but everything is just,
Yeah.
I feel like a lot of that stuff is just gray lines. Like
Yeah.
we don't ask for a DNA test. So I'm not telling anybody to lie or commit mortgage fraud, but
Yeah. Remember, you're
just,
telling the truth on these things. If they don't commit mortgage fraud.
yeah, don't say somebody is your brother if they're not your brother. We want to try and find family, but the guidelines, I mean, they're broad. You can figure out a way to be truthful and make it work, is what
Yeah.
I'm saying. But yeah, that's just, if you're considering buying a home, thinking about adding a co-borrower, these are the topics that or the bullet points or whatever that you should be discussing with that co-signer, just to make sure that both of you are on the same page. You understand the pros, the cons, you weigh those out and agree that yes, this is the route to go. And it can be extremely beneficial, but like you said, there are some risks. You've got to consider what one party might be doing in the future. And then there's also just, I mean, most of our first time home buyers stay in the house 4 to 6 years, I think, at the
Yeah.
most. So, and if that's the average, that means that there's a lot of people that are moving, after 2 or 3 years. So, but especially like it's one of those things too. If they bought when interest rates were really low, maybe they don't want to sell. They want to keep it as an investment. But, again, somebody's on them like obligated on the mortgage. So it may not be as easy as you think.
Yeah, exactly. So I think just kind of take everything with a grain of salt. Look at, does the benefits outweigh the I guess liability on it, the risk, risk over reward. What are we looking at there? Um, have that heart to heart conversation with each
Yeah.
other.
Just make sure that, I mean, let's just review it. So
I mean, I have plenty of
when,
people where when I go with them and they're like, this is what you can buy on your own because we can't count whatever. Do you have a cosigner? Do you have a family member? And this is what it means to do this.
right. Yeah. So if you are considering adding a cosigner so that to help you qualify for a mortgage, the pros of adding a cosigner: improved loan approval chances, potential better loan terms, assistance from family or friends just helping a loved one achieve home ownership, and then shared responsibility. It can make it easier to make those payments. And
And
then
then the
cons,
cons are the cosigner is financially liable. It impacts their credit too. It reduces their borrowing power for anything in the future. If you're making late payments, it could, have a relationship strain. There is legal action that can be taken, and it is difficult to remove somebody. You have to refinance to remove somebody from the mortgage. There is no other way.
so again, a lot of times it makes perfect sense to add somebody, a specific family member that's willing to help and has, the ability to do so. Fantastic. Just make sure you go over this with that family member. Make sure you're making the best decision for both of you. And that's it.
That's it. Pros and cons of having a cosigner on your mortgage. This has been a new episode of the Brutally Honest Loan Officer Podcast. I am Stephen Brock. With
I'm
me.
Derek Brown.
See you guys next week.
See ya.